$78 a barrel, and we are seeing prices move below the 200-day moving average. Again, a lot of the selling that we're seeing here is technical selling. We're watching what's happening to the euro. They're watching what's happening to stocks as well, and they're selling oil and other commodities. Gold is holding up well, of course, as the safe haven play, as the alternative currency, but oil is coming off sharply, and the next level to watch here for oil prices could be somewhere near $75 a barrel.
Sharon, thank you very much. And as she mentions what we're seeing in commodities oil, let's bring in Addison Armstrong here to get your sense. Addison, what's your take on what we are seeing in the energy markets, and in particular the big sell-off we've seen in crude over the past couple of days?
Well, it's very interesting. We were talking about it earlier on the desk here. What we've seen over the past 3 days this week before today was that although the market was coming down, the level of open interest hasn't really changed that much, which means, in effect, that the bulls have been trying to hold on to their position very strongly all week. It'll be interesting tomorrow to see what happens to open interest, but I suspect that what we're seeing is that the bulls have finally given up and have realized that they can't hold on, and the fundamentals and everything that's going on in Greece has finally got them out of the market.
But Addison, here's my question as we try to take a step back. I mean, we're looking at a loss here now, 422 for the Dow. We are back in that sort of, I think it's fair to use the word now, panic territory that we had seen back when we saw this happen here in the U.S. But yet, if I take a step back, I think about the China story, which is ostensibly what's been driving crude prices, and there shouldn't be any change in that because of what we're seeing on our screen right now.
Well,
should there be?
I think I beg to differ a little bit there, Erin. I think that, first of all, we have seen China move at the government level to try and slow down to their economy. The other thing that I've got to tell you is that this slowdown in Europe that's going to happen in the wake of what's going on in Greece, it's inevitable, is going to impact what's happening in China. Who are they going to export their goods to? And the U.S. isn't really that strong on its feet right now either. So China's export markets aren't there. They're already slowing down. They're taking away stimulus. And I think that's also weighing down on oil prices.
All right, Addison, thank you. We appreciate it.
Thank you.
And Jim Cramer is here on set. Now, Jim, I mean, it does get to this, I guess, this fundamental question, if you take a step back, which is there something wrong with all of Europe? Did they not write down those debts enough? Do they have a broader problem with their economy? Or is this just over-extrapolation from one small country?
No.
Which is it?
Like we said last night on the show, people from home can't play this. This is a very sophisticated hedge fund game.
Yep.
And you just kind of, I don't want to say turn it off, because obviously you want to watch it. But it's become a spectator sport. You really can't. Most of the retail investors watch my show. You really can't play.
But they're confidence, as you know, we've been talking all day about these stronger than expected readings in various consumer confidence surveys.
Well, they're really meaningless because it's a hedge fund game, and until you have to bring back the drachma, or Trichet has to come out and say the euro's broken. Until then, hedge funds are just going to try to break Italy, and they'll try to break Spain.
Right.
There is no resolution until these countries are broken.
It may be hedge funds playing, but the problem is everyone else is watching, and they're seeing these big negative numbers, and their confidence gets affected, and then maybe their spending gets affected, and it does actually become something that feeds through. I mean, how do we gauge the risk of that? That's all.
If I felt it was an opportunity, I would say, look, other than rotational names like a Pepsi or Dr. Pepper, just go start picking here. I felt that there was levels to pick. That was wrong. It was too early. I've been saying, listen, if you look at really quality industrials, maybe dip your toe in the water. It's obviously not working, so you got to pull back. I do believe that that this is not the right time in terms of our previous guest was saying, listen, nobody is in strong enough shape other than the Chinese to take this, and the Chinese will now have to, they don't even know, the government doesn't have to worry about slowing its own country down. The rest of the world will slow it down. So it's just not a great level. It's not an interesting level to pick. It's just not a good level to get involved.
Here's my other question, and it comes back to the point Steve raised, and everyone was starting to weigh in on, which is either is the market not paid attention, or are they disregarding, out of a lack of credibility at the European Central Bank, the comments that Trichet made?
I think it's the latter.
So you think it? So now that almost is more serious. If you don't have confidence or credibility for the European Central Bank, that is a much bigger problem.
We need a default. I mean, everybody knows that. With the banks, everybody's going to, all the money, the trillions of dollars of hot money is going to keep pressing until they get a default. Once we get a default, then the euro will stabilize, and it'll be interesting again. When I say interesting, meaning that when you buy a stock, you won't get the report and discover you're down $2 from where you bought it, which is what's happening right now.
Rick Santelli?
again. The euro versus the dollar just cracked under 126. I'm sure we're hitting sell stops. We're hitting knockouts in the over-the-counter market. They're all, of course, watching the euro versus the yen as well. Same picture from a slightly different perspective. And, of course, you can see as the euro and the equities, they are ping-ponging back off each other. And Jim Cramer is spot on. If you are a retail investor, don't touch the TV, but also don't touch your telephone and call your broker. Not a good thing to do.
Well,
Thank you, Rick.
Jim, look at where we are. See, this is my question. But
an interesting level. It's not a level.
But you're down. We have not seen a day like this, and I don't have the exact date.
Right.
But clearly, what you're seeing now is since what, last March when we hit the market lows, or the fall of 2008. You're down 560 points. People are seeing this, and those memories of fear are coming back, and that's what can become self-fulfilling.
I think that's true. Look, I'm sure, I mean, I was looking at some, I know this sounds boring, but some master limited partnerships that are
Jim, I'm sorry to interrupt.
7, 8. They're interesting.
Matt Nesto has some breaking news. Matt?
We have so many statistics here as this market unravels. Peter Schack, sitting next to me, just pointed out that the benchmarks have all lost their gains on a year-to-date basis. This 500-plus point loss that we've seen for the Dow is the biggest day, the biggest one-day loss that we've seen since December 1st of 2008. These statistics, as the market weakens up even more, will probably become outdated. We'll have to refresh them. Right before my eyes, Erin, I mentioned earlier that the 50-day average got taken out yesterday in the S&P. We just took out the 100. We have just taken out the 200-day moving average in the S&P 500, which is a very, very substantial and significant breakdown of technical support.
Okay, where are we? We're going to get Wapner up. It's a very fast market. That's very clear. I want to know, where do we start hitting curve? I mean, you're now dropping 300 or 400 points here in the past few minutes.
Well, I mean, like when I came down, it was not an interesting level. Suddenly it's down 300 more from when I sat down here. It's getting a little more interesting.
When was the last time the market was down 750 points?
That would have been the fall of 2008.
Obviously,
Aaron, if I can just say something here, Aaron.
I'm not. Yeah. Matt?
We've also just looked on the website of the New York Stock Exchange. Circuit breakers don't kick in after 2:30. Just to FYI, I throw that out there.
That is a fair point. Scott, you're there. What is the talk? What happens from here? And what are people saying? Now you're down 800.
Yeah, I just went through the December.
Yeah, Erin, and they're saying, when I asked them what the heck is going on down here, I don't know. There is fear. This is capitulation, really. I mean, it is classic capitulation. There is fear in this market. You can take a look at what has happened with the VIX absolutely exploding today. You have seen a flight to safety within gold, a flight to quality within Treasury, a flight out of equities from almost every single major sector. We have seen it accelerate throughout the day, and that's why right now we're sitting down 875 points, Erin.
All right, we've now broken Dow 10,000. As you can, we're down nearly 900.
I mean, you know, it was 400 points ago. I was 500 points ago when I sat down. It wasn't of interest. Kind of interest here.
Kind of a little bit. Michelle there was a moment today. Mohamed Al-Arian was on Power Lunch today, and here's the one thing that he said that kind of got us all very uneasy, is when he said, we've been talking to banks in Europe, and now, remember back during Lehman when people didn't want to lend to each other because of Lehman? Now that's what's happening to European banks. So overnight rates are starting to climb. They're starting to get nervous. And you're seeing fragility in the credit system there, and there's concern that we get fragility in the credit system here. We're not in the same position. We got a lot more capital in the banks than we did before.
But we're also much higher. I mean, if a Lehman, I don't want to mention any particular European banks, but when Lehman collapsed, it wasn't a buying opportunity until the next day. You know, I mean, you can't really just go in.
We are going to